What's up, everyone? How are we all doing? ASJ, Hassan, S3, VDC. How's it going, lads? We well? No worries, Hassan. Glad you're enjoying it, man. Glad you are enjoying it. Are you getting through the course, the trading course, all right? All right. So today we're going to get into systematization and go through how to build a system from the ground up, basically. Okay. So give me one sec. Right. So the first thing you need to do when building a system, I don't know if any of you guys have sat down and tried to work out how to actually flesh out a system before, a trading system. But the first thing you have to do is obviously understand the triggers you use to trade, right? So whether that's delta, divergences, EMAs, fib retracements, whatever it is, right? Breakouts, taps to support resistance. Once you've figured out those things and generally have a style in the way that you trade, then you need to focus on a few things. So I'm going to go over to a spider map that I've put together today, and essentially this is the first. Well, you can put together your system with purely a spider map, right? But for those that are familiar with my work, in terms of the recent video I did on gatekeeping, I want to take the system and turn it into a gatekeeping process. So taking it further than just a pure system on its own, and use it to as a pre-trade checklist with certain gates that keep you out of bad positions, essentially, right? And then that's the system and the gatekeeping process is a malleable template that goes on and on and on for years to come, and you tweak it and refine it using your journal entries, your monthly reviews of those journal entries. So the monthly review is normally the time at which I then tweak my gatekeeping process, my system. But I haven't actually had a system in a spider diagram format since 2023, probably 2022. So thought I'd do it again because recently I feel like I've been over trading a little bit. So yeah, the reason I've been doing this is twofold. The first is I feel like I've been over trading a bit. Probably to do with the fact that every time I'm streaming, I'm running through my trades, right? So, that first stream I did a few weeks ago, I ran through the execution of 12 trades running. And then that sort of set me up with a strong precedent, 12 trades in a week. And then the following, I don't know, it was about 8 that I ran through, but I've basically been over trading because, I feel like I need to keep up with those standards, which is silly, of course. And it's shown in my performance. And essentially what I want to get back to is hyper stringency. Folks in my Discord will know that a couple of months ago, I moved over to a new style of trading, which was way more stringent, waiting incredibly patiently for the top creme de la creme setups. I think I sort of got lost in the bullish conditions, because when markets are breaking out in harmony, you can get multiple alerts going off in one day. Was placing way too much risk on the table, taking way too many trades, and ultimately it was a profitable period for me, so that's all good. The performance was fine. What wasn't fine was the process and the mindset that came with it, which has now bled into these conditions where I'm still maintaining that same trade frequency when I categorically shouldn't be. So yeah, that's one of the reasons. The other reason is I haven't done this in a long time, and it's always good to get back to the drawing board with things. And I wanted to show you guys how to do it. And I thought the best way to do it would be for me to do it myself. So I'm about to run through my trading system with you guys in as fine, granular detail as possible. Absolutely no secrets left on the table here. And yeah, we'll get into it, guys. So just before we crack on, is the picture okay? Is the sound okay? Everything all right? What's up, Zaj? All good? Okay. So, before we dive into the nitty-gritty of it all, let's write out some things in terms of the basics of forming a trading system. So the first thing to focus on is the what, the where, the how. Okay. And if you've been trading for any period of time, you should be able to rattle down your system pretty cleanly down to just the what, the where, the how, right? And if you simplify it really in this sense, in just putting down, in one paragraph or even just a sentence, what you want to see, where you want to see it, and how you want to see it, in certain conditions, of course, then you will get very close to understanding how you should lay out your system. So, different systems, different conditions, okay? So having different systems for different market conditions. For me, that's two different systems. I have one regular system, which I will use to operate 70 to 80% of the time. It's a reversal system, a pivoting system, and then a secondary system, which was what I was just talking about earlier about in hyper bullish conditions, breakout trades, essentially, okay? Right, pro trend versus counter trend. You should have different systems, or at least different risk margins for trades you're taking that are pro trend versus counter trend. Those that follow me and know my style of trading know that I'm always a proponent, always an advocate of pro trend trading. Gate your main weaknesses. Okay, so by going through your journals, you should be able to pick out, which areas you're weak in, whether that's over trading, whether that's over management across a weekend period where there's not very much volatility, whether that is tightening up your stop loss too quickly, whatever it is. Okay, so you have to write down all your weaknesses that you pluck out of your journal. And then you also have to know what your A-star trades look like as well. Okay, what are your best trades? What are those trades that you've hit and gone, this is pure finesse, this is my system in its finest form? So essentially what you have here is what not to do, right? In your weaknesses, what not to do, and then what to do, okay? Once you have this body of information, then you can go ahead and create this spider diagram, okay? So, like I say, I have two systems, right? Regular system. Right, let's just go through the what, the where, the how, okay? So for the regular system, I'm looking for divergences and delta, okay? The where, key highs, key lows, or supply and demand. The how, as fast as possible. I want to see sharp inefficient moves into these zones or levels, right, in the regular system. Second system is hyper-directional. Right, that's what I've called it. The what is pro-trend breakouts, right? Pro-trend breaks. Essentially, everything in this system is pro-trend because you're following the direction of the market. This is a continuation, momentum-based strategy, right? Which is very rare. Okay, so the market is usually range-bound, as most of you know. So I'm normally operating the regular system, as I said, 70 to 80% of the time. But I will flip over and administer this hyper-directional system when we're in, raging bull markets or nuking markets. The where is that horizontal or diagonal breakout levels. And the how. Consolidation. So consolidation would be the main one, and then a few finer criteria, right? But mainly just consolidation prior to the breakout, okay? So as you can see, I've got my system pretty much written here, right? Very, very, very simple, okay? So I've got two different types of systems. I've got the what, the where, the how worked out for both of them. And then, of course, it goes into much, much, much more detail, but we start with this as an umbrella sort of exercise. Right, so let's get into the spider diagram. We'll start with the regular system, okay? What's up, Costello? Slow? You good? Right, so the first question. Is the trade based off a sweep, supply or demand, or deviation, right? So this is the where, okay? And all of the trades in the system will either be at a key high or low, sweeping SFP, a key high or low, tapping or moving into supply or demand, or deviating a key high or low, right? It's just an extension of a sweep. As most of you know, I'm sure, a candle closes past a key high or low, and then closing back in constitutes as a deviation, simply wicking above or below and then closing back under or above is a sweep. Okay, so this is kind of a redundant question really, because I know personally that everything that I'll take in my regular pivot system will be at these levels, and I won't be taking any other trade. But in case I'm feeling completely out of sorts or massively drunk and I'm thinking about taking a different trade, then I have this gate to pass through. Okay, so it's a very simple, most of the spider diagram is a simple yes or no format. Some are multiple choice, but mainly it's just a simple yes or no structure. And you'll see how I've decided to lay out this process in a very, very seamless gatekeeping format later on. But we'll start with the spider diagram for now. Okay, so is the trade based of a sweep, supply or demand, or deviation, right? Assuming I say yes, then we move on to, do you have a well-structured double divergence across both the RSI and the AO, okay? So we've got to our second gate here, and as you can see, we're already getting quite detailed, okay? And the reason being is because I've decided I want to experiment with tightening things up and only taking reversal trades or pivot trades when there are divergences present, okay? And then to tighten things up further, the divergence is the assumption here, it's baked into the text, but then to take things further, we have to have a double divergence across both the RSI and the AO, okay? For those that don't understand what I mean by any of this, then please check out my full form video on divergences. We go into a lot of detail about double divergences and what that means. All right, so let's assume we do have that double divergence. Then we go on to a trend analysis, okay? So as most of you know, I'm a massive advocate of trading pro trend. I do also take counter trend trades as well, right? And as this is the pivot or reversal system, that will be baked into this as well, right? So conduct your 3-part trend analysis: eyeball, guppy, delta. Eyeball is simply looking at the charts and seeing whether we are on the hourly, you know, uptrend or downtrend, right? So just something as simple as this, okay? Guppy is a mechanical indicator I use to make things more systematic, more objective, right? So always on the 4-hour for my system. I just whack this on. And you can see here that we're bullish now, right? We flipped this bearish trend. The EMA bands are now blue, right? So we've moved into bullish. And then delta, if BTC or ETH, right? So let's pull over delta. So we have to look at the delta dynamics, right? Look if negative delta or positive delta is supporting the trend. I'm not going to dive into delta too much. Again, I've got a full form video on delta if you want to learn more about that. Okay, so from here it's multiple choice, right? We could be taking a pro trend trade on either BTC or ETH. Could be taking a counter trend trade or neutral on BTC and ETH, or we could be taking an alt trade, right? So this is the next level, okay? So pro trend BTC and ETH goes on to, do you have reasonable delta confluence? Assuming yes, is your trigger on the 30-minute plus, okay? So the 30-minute time frame is the lowest that I'm willing to go, right? And you won't really see it too much on this page. For instance, over here, 2-hour plus. But the reason it's here is because this is pro trend, right? And that's where I want to be focusing my efforts. And normally in strong trends, it's more acceptable to drift down to the lower time frames because you are trading with the trend in your favor, and therefore you have the probabilities stacked in your favor as well, okay? So, and then also the reason that there's the lowest time frame that I trade on in this area here is because this is BTC and ETH and not alts, and I have reliable delta data, as I just showed you here, for BTC and ETH as well, right? Again, increasing the probabilities, the probabilistic odds of the trade going in my favor. So, assuming I say yes to this, I have reasonable delta confluence, and I say yes to this, is the trigger on the 30-minute plus, i.e. I'm not looking at the 15-minute, the 10-minute, the 5-minute, etc., etc. Then I can move on to, does this trade belong on the Wall of Fame? I'm sure most of you know what I mean by this if you've watched any of my other videos. If not, the Wall of Fame refers to a wall in my office. I'm staring at it right now, and it's about 20 odd screenshots of the top tier trades in my system across 2024, right? So these are just, again, going back to up here, it's what do your A-star trades look like, okay? So that's another way of phrasing it, right? Anyway, you end up here, okay? So counter trend, BTC and ETH, do you have extreme speed prior to the divergence forming, right? So we have another level in here that we didn't have here. Extreme speed is necessary when counter, okay? So again, pro trend, you have more probabilities, counter, you have less. As a result, you have to increase your stringency. That's what I'm doing here. Just adding another level of stringency. Assuming yes, do you have very strong delta confluence? Again, increasing the stringency, right? Here it was reasonable, right? Take note of the wording. Reasonable delta confluence and very strong delta confluence, right? So assuming I say yes, is your trigger on the 1-hour plus? Again, I'm doubling the time frame up here. The higher the time frame, the higher the validity. Okay, so counter trend is very different to pro trend, much more stringent, right? Then we move on to alts. The first gate here is BTC incredibly obviously counter to your position, right? Now, I put in brackets here rare, right? Because normally I don't look at BTC when I'm trading my altcoins, right? That being said, there is, 10% of the time, say, times where I am very directionally confident on where BTC is headed. And as a result, I don't want to trade counter to that thesis, okay? So people often ask me, do I take BTC into consideration when trading my alts? No, generally speaking, I don't most of the time, because you may think that BTC goes up or down at that point in which you're taking an altcoin trade. But really all that thinking is just a gut feeling, right? Ask yourself in that time where you are taking BTC into consideration for your altcoin position, would you take an isolated trade on BTC based on that theory? And most of the time it's going to be no, because it's just a gut feel, right? Your analysis on BTC in that moment isn't deduced off a technical setup per se, back tested and historically tested, stress tested, technical setup. It's just a gut feeling, right? And that's too wishy-washy for me. Okay, so most of the time where you do skip that altcoin trade, I used to do this back in the day. Skip the altcoin trade based on a gut feel on BTC. BTC just chops around, goes sideways. The altcoin does play out, at least to the starter of the position. Because why? Because it was the technical setup, right? And if BTC does nothing, or just drifts around, then that setup will play. Okay. But that being said, 10% of the time, say 5% of the time, whatever that percentage is, it's a rare frequency. It's not very often. I will take BTC into consideration, and in that moment, if it is incredibly obviously counter to your position, right? If I say yes, then that gate has kept me out. Okay, I cannot proceed, right? If I drift off here into an unanswerable, blank, any of these blanks, that means I cannot proceed. Okay. So then we move on to which trend alignment is the alt trade you're thinking of taking, right? Is the alt trade a pro trend alt trade or a counter trend alt trade? Okay. So let's say pro trend. The next gate would be, is your trigger on the 1 hour plus, 30-minute only acceptable if super clean div into intra supply or demand, right? This is something very specific to my system, but a caveat and exception that I've worked out that I'm happy to bake into this equation, based on a vast amount of experience and analysis of my journals. Assuming yes, does the trade belong to the wall of fame? Yet again, okay. So counter trend, alt position. Do you have extreme speed prior to the div forming? Right, similar to this. It's the same gate as this, right? And is your trigger on the 2 hour plus? Right, so we're increasing that stringency yet again, from counter BTC and ETH. Reason being is because we don't have the delta data, aggregated delta data available on altcoins at the moment anyway, that we do on BTC and ETH. As a result, I have I have much less confidence trading altcoins without that, trading anything without that data. It's my second pair of eyes. Okay. So as a result, I need to again stack up the probabilistic odds in my favor, and I know that higher validities equal higher time frames equal higher validities. So again, bumped it up to the 2 hour here. So assuming I say yes, has enough damage been done? You want to see severe signs that faders have got messed up, right? What do I mean by this? Let's say here. Right, so if we're taking a reversion trade on a range, let's say we come up here, we start diverging, right? I don't want to see price just tap this level here, this range high, and then drop down here. Okay, that's not what I'm looking for. What I'm looking for is some damage, some proper wickage, right? Something like this, okay? Really mess up everyone that had their stops here, or, you know, something like this. Comes up to the range high, starts diverging, comes down. People think it's a tap into the range high, you know, simple bearish divergence play. And then we come down here, and then we do something like this, right? Just wick back up. Fuck everyone up, stop everyone out. You know, that's what I'm looking for. I'm looking for serious damage to be done when I'm trading counter trend on altcoins. Okay? So again, this is going to keep me out of a ton of positions, right? But it means that I'm going to increase my win rate, increase my profit factor, and be able to size up and build the account more sustainably, because I have, you know, very, very strict list of criteria, strict and specific list of criteria to keep me in and out of positions. So all roads lead down to this. Does it belong on the Wall of Fame? If no, right? So I have to ask myself. I have to physically go up and look at my wall, where I have all my A-star trades in my system, in this system anyway, the regular pivot system, printed out, stuck up on there. I have to be honest with myself, look at the current setup and go, does this really cut the mustard? Does it belong on the wall? If not, then the gate's kept me out. If it does, move on to the next gate, which is the path clear enough in terms of the first hitch. So what do I mean by that? First hitch will probably be known by you guys by first trouble area. Let's say we're taking a deviation, right? We've got a deviation play. And in the way, the how of this deviation is that price moved up here very inefficiently, right? So this here was a sharp move up, right? Inefficient move with speed. Okay, so it shot up very fast and didn't leave anything in the way of demand, right? As it moved up, right? It just escalated very quickly. That's what I'm talking about in terms of my first hitch, right? So if instead there was a pocket of demand here, or even let's bring it closer. Let's say there was a pocket of demand here, then I wouldn't be able to answer honestly if taking this short position on this deviation was devoid of a close first hitch, right? So let's say I'm entering here, stop here, right? My first hitch is here, right? So not what I'm looking for, okay? Even if you have a really clean setup, right? This is a gate I recommend focusing on. Because and most people don't map out their trade as they want it to sort of play out and the path it has to go through, right? Which is something that I'm again a big advocate of. Reason being is because you can take a very good setup and then obviously you can see what I'm going to do, just bounces in here, right, and messes up your trade, okay? So, assuming the path is clear enough, have you waited for the appropriate div candle trigger, right? And this is something that I have been guilty of in the past, right? I see a clean bullish divergence or bearish divergence forming. Let's say that div is forming on the 4 hour. Instead of waiting for that 4 hour candle close to confirm the divergence, I jump the gun and enter on an hourly candle or whatever it is, right? So this is just a gate specific to one of my weaknesses, right? Again, going back to this, what are your weaknesses? Gate your main weaknesses. Okay, very important, guys, to go through your journals, right? See where your Achilles heels are, and put gates in place for them. Okay. Another weakness is your stop placed as wide as possible. This isn't really a weakness of mine anymore. It's very apparent to me that it's a massive weakness of many traders out there by scrolling through the timeline. Members of my group as well. I can see people are placing stops way too tight. It's something that it was a weakness of mine back in the day, but now I've learned the comfort of wide stops, the comfort of position building. So yeah, it's just something that I keep there for good practice anyway. Can't hurt, right? Assuming yes, then move on to have you checked if if higher time frames could form a divergence, are also overextended, and if so, only taking half of the installment with a stop wide enough to build into that possibility. So what that means is, right, let's see. So we've got the RSI here, right? Let's say you've got a divergence in here on the hourly, and it's a clean divergence. Well, then what this means is skipping over to the 2-hour time frame, the 4-hour time frame, to see if we have the first legs of a potential divergence forming on slightly higher time frames as well, right? Because we can have very clean divergences form on lower time frames, right? 30-minute, 15-minute, hourly. And what I used to do for years was take full installment on those confirmation candles, or like I told you earlier, jump the gun, even worse. But then the divergence would go on. The old aphorism, the div keeps diving. It will go on to diverge on the higher time frames, be a very valid divergence on those time frames, and then play out, right? So this is just a note on being cognizant of that and executing in a way that we can position build, right? If the lower time frame divergence does play out, then fine, you're in for 50%. If it goes for the higher divergence in the end, the higher time frame, then you can build into that as well. Okay. So assuming I say yes, have you decided to take this trade or skip it? Are you 100% honoring your system, right? So I have to think about this one, right? This whole process of being systematic with a pre-trade checklist, or as I call it, gatekeeping. I've said before on social media, I've said members of my group as well, this writing out a system and then having these gates in place to keep you out of positions and really maintain that stringency is, for me, the only way that I can see 99% of you guys becoming profitable traders, right? There's 1 in 100, 1 in 1,000 that can do all of this with the appropriate administered discipline without having a systematic process to follow. Most people are dopamine addicts. They jump the gun, trade off quote unquote intuition and gut feel way too often. Micromanage positions, overmanage positions, fall subject to a whole host of negative trading habits. Like I said earlier, tight stops being one of them. But the list goes on and on and on, right? It could be oversizing, could be tight stops, it could be trading for a weekend when you shouldn't be doing that, categorically speaking, based on your journals. I'm sure you guys all resonate and you're all thinking about your own weaknesses as you listen to me saying this. But yeah, having this process in place where you know exactly what you want to see, right? The what, the where, the how. You know exactly what your A-star trades look like, and you know exactly what your weaknesses are. Then you can really start getting systematic about your trading. And then it's simply a case of discipline, right? Honoring this system and tweaking as you go along, right? Tweaking. So, constantly journal every position, every trade, journal in detail, monthly reviews, depending on your frequency, weekly reviews, quarterly reviews, whatever you want to do. But once conducting those reviews, you then you cross-reference your system, right? And you know, let's say you find another weakness in there is that you've been oversizing on positions recently for whatever reason. Then you just whack it in as another gate, right? It becomes a gate. Let's say that, you know, for argument's sake, you don't need this one anymore because you're a natural now with divergence trading. You're very disciplined, and you always wait for the divergence candle confirmation as an execution trigger. Then you can sub it out, you can replace it, or you can add it as a separate gate, whatever it is, right? You can mess around with this. You know, you guys have all got TradingView accounts. Get busy, you know, put pen to paper. If you are doing this physically, which I do recommend doing before you put it digitally, then obviously use a pencil and rubber, because you'll be going through the iterations like no tomorrow. Anyway, mind maps, spider maps, a great way of laying out your system. Okay, so let's say you've taken a BTC trade, pro trend, blah, blah, blah. You've followed all the way down. You've got to the end here. You've honored everything within your system, and you've got to the end, right? So what I'm working on at the moment, and don't look at this in too much detail, is how much risk I want to assign to any type of position, right? So you've got the pro trend BTC or ETH, you've got pro trend alts, you've got counter BTC ETH or counter trend alts. The percentages next to them are basically baseline figures, right, that I think here crop up on the 2 hour, and then there's just standard deviations of that, the downside to the upside, and you can see that it goes up to 12% risk per trade if I'm taking a pro trend BTC or ETH position on the daily time frame, with everything, all the gates checked, right? Then I can scope up to 12% or even 15% here. A plus boost, add up to 3%, everything is perfect, capping at 15% total. Now, I'm sure most of you are logging off the stream at this point, going, what the fuck is this guy talking about? He risks way too much. I hardly keep any capital on my trading account, right? That's what leverage is there for, right? You leverage the capital that the exchange has, because and in that way you don't have to keep too much on the exchange. And you remain custody of your crypto in cold storage, right? And anything can happen on hot wallets on exchanges. I don't want to hold large sums on exchanges, so this 12% probably works out to 4 or 5%, maybe 3 or 4%, and the lower end are the ones and the twos of my total liquid net worth. Okay, so don't read into this too much. Okay, this is just a personal system. But anyway, this is something that I fed into ChatGPT, and I said I want to weight more risk towards BTC and ETH versus alts, because I have Delta available. I want to weight more towards pro trend versus counter, and you can just go through a list with AI, with an agent, and just work out your risk. Okay, so these are the changes that I've made from my current gatekeeping process on Airtable. So if any of you have watched my gatekeeping video, it was good, but it had some flaws, right? It was a blanket system, and although I've been using it for the last 4 to 6 months, and it's greatly helped in systematizing my trading and my process, it was too much of a blanket application, and this really gets into the nitty-gritty, right? So I've separated out BTC and ETH from alts. I've put specific measures of stringency in place, i.e. any counter trend trades need speed. There's different minimum time frames for pro and counter, as you saw above, 30 minutes to 2 hour, depending on the market, depending on the trend alignment. Double divs are mandatory from now on, again being very stringent with that. Removed a bunch of columns, regret weekend rules, so that's stuff that was from my Airtable previously. Added whether taking or skipping and why. And added dynamic AI assisted risk here as well. Okay, so let's go back up to the beginning of where this all started. As I said, this is my regular pivot system, so this is what I will be utilizing most of the time, right? But when we are hyper-directional, and I use the words hyper-directional on purpose because I could simply call this breakout trading, right? But I want to make sure that I'm only administering this system within the right context, okay? So I've named it hyper-directional, and the language that we use to ourselves, guys, is super important, okay? The way that we talk to ourselves in our journal, the way that our gates are worded, the way that we word our system, it can really make a difference, right? In that split decision, you know, heat of the moment where you're taking a decision on a trade. You know, I'm going to look at this and feel guilty if I'm filling out a checklist for a trade, a breakout trade, which is not in a hyper-directional, isolated market or market context. Right. So what hyper-directional markets are you trading? BTC and ETH or alts? Okay, so let's go BTC and ETH. Do you have delta in the way of your trade? So anyone that's watched my breakouts video will know that if we're looking at a breakout trade, we want to see consolidation, right, prior to the breakout. And then when it breaks out, okay, we don't want to see a large spike of, in this case, positive delta produced, okay? What that means is that the market buying, right, which is fueling this breakout, is doing so into asks, right? So limit orders, right? So market buying is taking place into limit orders, which are suppressing the breakout, right? And it's making the odds of your breakout trade going to plan severely diminish, okay? So again, full video on Delta, you can check that out if you don't know what I'm talking about. But that's a key gate here, okay? So for BTC and ETH, where I do have reliable aggregated Delta, do you have delta in the way of your trade? If I'm taking a breakout trade and I do see a large spike of counter delta to my position, then the gate has kept me out. If I, you know, here it's yes, all these examples are no. Do you have delta in the way of your trade? Yes, kept me out. If no, then I can proceed, okay? And I'm proceeding to the next gate, which is the general crypto market trend heavily in your favor? You truly have the wind at your back. Right? I'm talking about a general market context. So I'm talking about a raging bull market or a raging bear market here, okay? Ignore these notes here, HDA, that just means hyper-directional alts, because I have a different one of these gates over here, and you'll see that I've put this together in a platform in a second. But is BTC incredibly obviously counter to your position? Rare again. Okay, so we've covered that in the regular pivoting system, but again, the same question. If trading altcoins, is BTC incredibly obviously counter to your position? So these are the first two gates when I'm taking breakout trades, right? One for BTC and ETH, one for alts, okay? Both, if I say yes to, then it keeps me out of the position. Move on to the next one, okay? Is the general crypto market trend heavily in your favor? Same, okay? So if I say yes, then is the isolated market you're trading truly hyper-directional, right? So you need a very strong general market and you need a very strong isolated market, right? So let's say I'm trading Solana. Solana has to be, you know, very, very strong in a raging bull market for me to proceed here, okay? If yes, do you have a proper sustained period of technical consolidation prior to the break, allowing to drop one time frame for analysis, not more, okay? Now, should have kept the last doodle I drew up, but let's say, okay, I'll paint an example here to see what I mean. Let's say this level is a 4-hour breakout level, okay? Then I'm happy to drop down to the 2-hour, right, to see this consolidation, okay? Not the 5-minute, right? Not the 10-minute, not the 15-minute, the 2-hour, okay? Because the time frames that I trade in are 30-minute, then jumps up to the 1-hour, jumps up to the 2-hour, and then it's even increments 2, 4, 6, 8, 10, 12, and then daily, okay? So for me, right, this, if it's a 4-hour breakout level, I'm happy to dive down to the 2-hour, right, and that's acceptable to see consolidation on the 2-hour. Anyway, I might play around with this. It's something that I scratched out earlier, right? But I'm probably going to tweak this as I go on, trade through this process, analyze it, reflect, and go through my journal. And perhaps I can make this 2 time frames, right? So if it's a 4-hour breakout level, I'm happy to go down and see 1-hour period of consolidation. Do you have RSI resets without dropping down the time frames too much, right? So RSI resets are where price cools off back down to or back up to the 50 level. Again, you can look at this would be in the divergences video if you want more information on what an RSI reset is. Again, it would be in the breakouts video as well. Assuming yes, if a diagonal break, do you have market structure confluence whilst the general structure formed? So higher lows for a breakout, lower highs for a breakdown. In other words, is it a technical triangle? Okay, so essentially what I mean here is when I'm taking diagonal breakout trades, right? I want to be, okay, so let's simplify this, right? A lot of people, when they take diagonal trades, right, they go, okay, cool. So this is, this here is counter trend, and that's great because the general trend is up. So I'm going to take this diagonal break, whatever that looks like, right? And they don't really, all they're doing here is just, even just like this, right? All they're doing here is as they go, okay, cool, we have, 1, 2, 3 taps to validate this trend line. Perfect, that's a part of my system that I need 3 or more taps to validate the diagonal. We've got consolidation prior to the breakout, that's perfect. What they're not doing is taking into account what the lows look like, right? So essentially what I want to be focusing on from now on are baby pip style symmetrical triangles, okay? So if you're taking a breakout trade, like so, yes, obviously I'm looking at the upper trend line, but I'm also looking at the lower trend line as well, okay? So I want to see these climbing highs, okay? So it's a sign that momentum is to the upside, right? Price is climbing, we have that momentum building, and we don't have, stuff like this, okay? So we've still got the trend line, but it looks like this, okay? This is not something that I want to be focusing on. I want to be focusing on the higher lows, not lower lows, and vice versa for breakdowns, okay? So anyway, just something particular to my system again, and just another layer of stringency. But obviously you can be taking horizontal breakout trades as well, either or, lead you to the next gate, which is there a divergence present counter to your breakout trade? Very simply, we don't want to be taking a breakout trade to the upside as price does this, higher highs here, and the oscillators make lower highs, okay? We don't want to be taking moves into divergences that are counter to our position. Are you waiting for the breakout candle to execute in the trade's highest probability, right? So again, waiting for that breakout candle to occur, something that I used to do when I was looking to tighten things up as much as possible and be a bit more risky with things, was enter into this consolidation here as opposed to waiting for the breakout candle. So it's kind of that bell curve scenario that I've taken with my journey on breakout trades, right? When I first started breakout trading, I wanted to very much wait for wait for the breakout candle, okay, and take the trades like this. Right, wait for that candle close above or below the level, and then take the trade. And then as my sort of journey as a trader progressed over the years, I tried to start tightening things up, looking for order flow signals, RSI resets, maybe even like a sweep of a low here, for instance, take an entry on the candle close here, really tighten up the trade, which is all well and good. And, you know, in my breakouts video, I do go through, if you want to start building, you know, or a partial installment in this regard, to tighten up your R on the trade, then by all means experiment with it, feel free to play around with it. But again, I want to move my system, my trading back to the highest probability possible. So I'm back to waiting for that technical confirmation candle close past the breakout level. So again, goes through the risk, okay? So I'm not going to run through this, particular to my system, particular to how much I hold on my account, etc., etc. Okay, so you can play around with your risk measures yourself. So I just want to pause at this point, and then I'll glance at the chat. If you guys have got any questions as well, feel free to shoot them over at this stage before we move on. Hassan, how do you keep yourself? What's up, Moran? You good? How do you keep yourself going in these rough conditions? Just get busy, man. Get busy. Yeah, eternal student, man. That will never change. Okay, cool. So, Triple VI, do you mind sharing your system diagram chart so I can use it as a template? Sure, I can do that. You won't get very far with it, okay? You're not going to get very far with it. Everyone has to string out their own system, and by all means, you can go through the replay of this and screenshot it and try and emulate or replicate my style of trading to a T. But honestly, you have to do this exercise yourself. You cannot learn this through secondhand experience. This has to be blood, sweat, and tears over the years. You know, going through your own journals and really using your own trading system to grow and develop this over years. You know, it's not a quick thing to do. If you try and take mine and use it, then good luck to you, is all I can say. Not something that I advocate at all. Unless you are a member of my group, someone that I'm doing one-to-one mentorship with, and you're really trying to copy my system one-to-one. I'm putting a ton of effort in doing so. Then it's going to be very difficult for you to even form any sort of foundation in that regard. Tickers we'll save till the end if we have time, because there's quite a few things to get through today and I want to focus on systematization. Okay, so right, where are we? So basically, stage one, flesh this out, right, as best you can. My advice when doing so is, if you, because this took me a while to do, right, and at times I had multiple verticals going on here, and my best advice is, if you can consolidate things into one line where possible, then do so, okay? because what I'm about to show you now takes this all to a different level, and it becomes very, very difficult to do so if you have multiple running verticals, okay? So essentially what I've done is I've put together a Gatekeeping V2 system in type form here. And basically what you can see here on the left-hand side is all of this stuff is just marked here, either as yes or no options or multiple choice. And you can see I have 32 different statements, questions, multiple choice questions with different answers. And once you create all of these, then you can basically map it out like this. So as messy as it looks, this is my system, okay? This is the system that I just ran through with you in a completely different visual format. It looks very messy, but it doesn't actually matter once you get into doing this exercise. And again, use ChatGPT when doing this, right? Use AI agents, they'll make your job a lot easier, especially when trying to just work out the Typeform platform. It's actually quite easy once you get the hang of it. You just go ahead and add content here, either multiple choice, or if it's a yes or no, click yes or no. And you can put whatever you want here, right? You can say, is the trend in your favor? And then it's just a simple yes or no, okay? So I'm gonna get rid of that because I worked long and hard on putting this together today. Again, which system are you operating? What hyper-directional markets are you trading? Blah, blah, blah. So once you put this together, then it becomes a very, very straightforward flashcard-like based gatekeeping process, which I believe is now superior to what I was doing on Airtable. So I just want to run through what that looks like, and we can go through some examples. So give me one sec. Right, actually I've got one here, okay? So I took a position on Solaya, however you pronounce it, Solaya, earlier on today, okay? So it was a 2-hour bearish divergence trade, okay? And we can run through this, and I'll show you what those flashcards look like, okay? So let's just put it over here. Right, so to run the system, you just click preview here. Okay, so which system are you operating? So if we go look at this, this isn't the hyper-directional breakout system, right? This is the regular system, okay? So regular pivot. Is the trade based off a sweep, supply or demand, or deviation, right? You can see that yes, we're sweeping this historical high here, okay? So yes. Do you have a well-structured double divergence across the RSI and the awesome oscillator? Yep. All right, you've got that double divergence alignment, right? Both oscillators are diverging. Conduct your 3-part trend analysis, eyeball, guppy, delta. Delta only if BTC and ETH, and determine whether the trade is pro or counter trend, right? So firstly, we'll do the eyeball, okay? So eyeballing, very simply, up, okay? Guppy is always 4-hour, okay? So I just whack on the guppy. Guppy is bullish. And we don't have delta, okay? So as it's in an uptrend and I'm taking a short, this is counter trend, but it's an altcoin trade, okay? So I go into alts any. Is BTC incredibly obviously counter to your position? Let's take a look at BTC. BTC is not doing very much at the moment, okay? So I'm not incredibly directionally confident on BTC once taking this trigger. So I say, is it incredibly obviously counter to your position? No. Which trend alignment is the alt trade you're thinking of taking? Is it pro trend or counter trend? So this is very obviously based on my 2-second trend analysis, basic trend analysis. This is very obviously a counter trend trade, right? So counter trend. Do you have extreme speed prior to the div forming? Yes. Okay. This is a very sharp move. All right, this is extreme speed. I'm happy with that gate. Okay. Is your trigger on the 2-hour plus? Yes, this is a 2-hour divergence confirmation. Has enough damage been done? You want to see severe signs that faders have got messed up. Yeah, there's some nasty wickage here. Okay, so first tap into that, you know, the first sweep technically, second sweep, sweep of a sweep, and third sweep. Okay, so this is significant damage being done. Anyone who placed their stops here or here on that high, you know, they've all got stopped out. People that try to attempt this short, you know, using the same criteria as me, perhaps divergences, but trying to scope in too tight and essentially, you know, letting greed get the better of them, they've got messed up. Okay, so yes, enough damage has been done. Does this trade belong on the wall of fame? Right, get up, look at my A-star trades, or, you know, it doesn't have to be on a wall. It can be in a ring binder or some, you know, a book, whatever you want. Yes, right, it's a great trade. Is the path clear enough in terms of the first hitch? Right, so because we have this inefficiency, the first hitch really is this market structure defense zone down here, and then final target would probably be the lows down here, but there's not really much in the way of demand here. So again, the path is clear enough. Have you waited for the appropriate candle trigger? Yep, I took this candle here, 2-hour divergence confirmation candle, as I interpreted it. Is your stop place as wide as possible whilst being reasonable? Yep, it's a fairly wide stop up here. It could cater for even more fuckery, you know, sweep out these highs again with a sharp move and then potentially come down. I would survive that if it wasn't too extreme. Have you checked if higher time frames could form a divergence? Yes, there was a 4-hour divergence, a tight 4-hour divergence that formed at the same time, and the candle close was the same candle close, right? So you can see a tight divergence here, flat topped on the RSI, coming down on the AO as price makes higher highs, the bodies of price makes higher highs on the 4-hour. But because the candle was closing at the same time, I was able to take a full whack, okay? So I have checked that. Have you decided to take this trade or skip it? I am taking, right? So then it just leads me to the same risk window that I was showing you before. And I can work out that it's an altcoin trade, it's counter trend, and it's on the 2-hour, so I'm administering 5% risk to this position, right? Very quick analysis of how much risk I'm assigning to the position. And then that's it, right? But let's assume that we're over here. Does it belong on the wall of fame? And I say no, right? And I submit. Stop, the gate has kept you out, right? And you can put whatever sort of imagery you want. I put a monk here. You can put a gate. You can put a stop sign. Whatever you want, right? I'm honing in on the Zen discipline side of things. But whatever imagery works for you. I was trying to look at whether you can incorporate sound effects into this as well. But I think that was a coding job, which is not my forte. So yeah, anyway, that's just a run through of the new sort of flashcard gatekeeping system on Typeform. And I'm still using Airtable, so you can see I've got this trade here, actually the first trade since I set it up as a separate window. But now it's just a journal, right? So short at the time, the trade elements, pros and cons, you know, what's the trade plan for the trade, screenshots and documentation, 2-hour chart in for fallback here, right? So I'm just going to be using Airtable going forward as it's just a simple documentation journal style format. And you know, each to their own, right? The gatekeeping process that I had before might work perfectly well for some of you guys, and you may prefer to have it all in one, all documented in Airtable, and your system may be simple enough to warrant that. For me, the simple fact that I had you know, regular pivot systems or hyper-directional made things already quite confusing, and then I do have specific set criteria that I want to administer for BTC and ETH versus altcoins as well, with the nuances of the tools that I have to my disposal, aka Delta. So yeah, it made more sense. Also with my gatekeeping, what I was finding before is, you know, here it would say, does this trade belong on the wall of fame or whatever, and I'd actually catch my eye looking at something over here, and I'd be like, oh, I've done this really well. So I'd skip through, you know, fast-paced skip through the gates without really honoring them. And the whole thing about this pre-trade checklist, you know, these gates, whatever wording you want to use, stringency, whatever wording or, you know, format you want to think about it, you have to honor it, right? You can write all this stuff down, but unless you honor it and treat it with respect and discipline, then there's no point even going through the exercise in the first place, right? And yeah, I feel like the flashcard form is something that I will benefit from, and I imagine most of you will benefit from as well, because it's very, very simple once you get it laid out, right? And you get it into the flashcard form. It is super, super simple, right? You just yes or no's, and you can fly through them, right? You don't really have to think that much. And if you say no, then you're out, you know, that's it. And you have to honor that, and you close down your computer, you walk away, you wait for the next opportunity to fill this in. But honestly, guys, if you put something like this together, it will eradicate your losers, it will skyrocket your win rate, and profit factor, and subsequently your equity curve. You just have to treat it with respect, right? That's all. Right, so hour and 10 minutes, and we are done. I'm having to hop off, but if any of you guys have any pressing questions on the system side of things, then please let me know. No? All good? All right, guys. Well, listen, been good catching up. I'll catch most of you in the Discord, and the rest of you, hopefully catch you, potentially not next week. Next week I'm in the UK, but I'll be streaming the week after, and I believe I have a full form video lined up for next week as well. All right, so take it easy, guys.